Goldman Sachs, JP Morgan, Morgan Stanley. These names sound powerful, but what if I told you one banker once saved the entire US economy, another secretly financed wars in Europe, and one legendary firm collapsed in a single weekend? That's the real story of investment banking. In this video, we're breaking down what investment banking actually is, how it started, and why its history is filled with wild stories, from railroads and junk bonds to Tesla and trillion-dollar megabanks. And stick around, because later I'll reveal the single deal that made Goldman Sachs the king of Wall Street. In most industries, history is a nice to have. In investment banking, it is the business. If you're a government raising billions, do you trust a startup bank or one that survived wars, crashes, and revolutions? That's why legacy names like JP Morgan and Barclays dominate, even after a century. And if you think history doesn't matter, wait until we get to Lehman Brothers. Back in the 1800s, the US was exploding with railroads, mines, and factories. Local banks couldn't keep up. Enter the investment banker. Instead of lending deposits, they raised huge amounts of money by selling bonds and stocks to investors. Kuhn, Loeb & Co. basically bankrolled America's railroads. In Europe, Baring Brothers financed global trade, until one massive bet almost wiped them out. But more on that later. Here's a scene straight out of a movie. In 1907, the US banking system was collapsing. No Federal Reserve, no safety net. Who saved the day? JP Morgan himself. He locked rival bankers in his library until they agreed to pool their money and stop the crash. That one move stabilized the entire system and directly led to the creation of the Fed. But it also raised a terrifying question. Should one man have that much power? At their core, investment banks are like middlemen. Governments need money, so they issue bonds. Companies need capital, so they sell stock in an IPO or a secondary offering or offer corporate bonds. Investors want returns. The banker in the middle makes sure the deal actually happens. But when it goes wrong, Baring Brothers found out the hard way when a single rogue trader in Singapore nearly sank them in the 1990s. Proof that even the most established centuries-old names aren't bulletproof.